Today we're going to be looking at a move that occurred in the bund on Wednesday, and just kind of a few of the different things. Just two, I'm going to show two examples of me executing early in the morning when the market kind of potentially looked like it was breaking, especially on the back of a kind of a fundamental announcement in the with the Austrian 100-year announcement. And then what I'm going to be looking at is when the market did finally break. So later on in the afternoon on those kind of botched Minuchin comments. But I just want to show you how the price action was really different, in my opinion, in those two areas. So basically, just kind of a rough kind of backdrop as to what I was looking at was on the Tuesday. It was apologies, Wednesday. So we had this failed breakout of this kind of post-Sintra kind of bracket range, and we had this failed breakout, and then the market gapped down, and we'd been sitting in kind of quite two clear balances in terms of we'd had this kind of really top-heavy morning balance, and basically we were basically encapsulated in the previous day's balance. And this was quite important for me. I felt with the gap downs, most importantly, was the significant was kind of it gave you the sign that there's potential for kind of short-term liquidation move, a kind of counter auction from these highs. I mean, this was quite significant, I felt, given where we were trading and the positioning which we had here, and the time and the amount of positioning and weight we had held up here. Market couldn't fill this gap, and then we spent all morning balancing in this within the previous day's value. So this was kind of a really important thing to kind of bear in mind. And the reason why I mentioned value so much here is because it was a really important inflection point for me in terms of if we were to liquidate. So if I let me just get rid of some of these, so it makes it tidier. So yeah, for me it was quite an important inflection point. And given like I said, we were kind of separated by these two balances. So we were kind of sitting on top of this kind of this morning balance, and we had some kind of poor ledge structure as well, and there was all these different things that I felt were kind of lining up the market for a potential fast money liquidation move, which we did get. And yeah, this was we had kind of two scenarios. I mean, this kind of whole balancing off period was kind of, I guess, spurred on from the fact that we had that 100-year announcement from Axia confirmed. So when that was confirmed, we got quite an aggressive move. We were still trading within the IB at this point. So if I take today's IB and I just move it to how it would have looked on the day. So this was the initial balance range we had at the time, and as you can kind of see, we broke from the highs straight to the lows, and then we spent literally, I don't know how many hours that is. I mean, it's an hour or two. Within this, an hour, I think, within this 5-minute candle. And then we ended up getting around kind of 10ish, around 10 o'clock. We had this break, high volume break, really kind of strong energy. And the kind of price action which we saw here was, it kind of, initially I was quite slow to execute on the announcement. I mean, I wasn't sure as to how we would react in the bund. I mean, there's other markets, say, like, for example, the Buxel, which you may have been kind of more convicted to hit straight off the bat. I mean, that's not to say you couldn't have got a good price in the bund. But for me, like I say, my kind of real focus was below value, and also was below this afternoon swing low here. If I can just move this across so you can see, was this afternoon swing low, which kind of encapsulated this balance, right, and kind of cut us off from this lower balance. It encapsulated this kind of poor grindy bid, and this is where the energy and flow really started coming in below this afternoon swing low and below value. And basically what I'm going to show you is initially how I executed. Post 100-year announcement, I was quite slow, started executing below value. I was very kind of focused on a zone, and then after all of this, after we had the Italian deficit number come out, the market couldn't go bid, all these different factors coming in here. And then we eventually broke out of this balance. So I'm just going to kind of quickly reflect on the two different types of price action we saw. So if I pull up my ladders. Okay, so let me just remind myself of those levels. Where were we looking? So we were looking at. So basically, yeah, for me, the real important area were the 63s and the 61s was that afternoon swing low. which was like kind of separated from that top and lower balance from the Tuesday. So let's just go on the ladders now. So if I quickly put it up. So shortly now we should see the announcement of that 100-year. And for me, so for example, so you see the market get hit, and for me, it was more because with these kind of liquidation moves, what you want to see is you want, like I say, very often I always talk about, you want to see a type of price action, what you're looking for in which will suit your kind of your trade if it is to pan out. And the most important thing with these liquidation moves, I find, is that you need to have a very kind of small kind of rotations counter to the liquidation. So you're looking for a long liquidation here, so I shouldn't really be seeing much uptick off the lows. I should be really on side. I shouldn't really go offside at all, to be honest. And below these 63, 61s, this is kind of where I want to see really heavy reloading. Obviously, I want to see good delta with good volume, but for me, it's really heavy reloading and really high volume. So even if I'm seeing clips up, okay, for example, like we're saying now, around these 64, 63s, I was really happy to see big clips trading into the offer at this point, but as long as it kind of, the offer stayed heavy. So for example, now we saw that uptick to 3s and 4s, and I instantly just started feeding another clip. We kind of got the clip down, heavy reload, nice firm offer. Again, we can't take the market bid, so we now trade into 62s. I get my fill. So my risk rate at this point, with this size that I have on now, for me, I want to be at very tight risk, above the 64s, above the 60, kind of where the majority of this volume is trading, where the market was at this point holding. And like I say, you're looking for a liquidation move, so I mean, 2 or 3 tick counter rotation off the low. At this point, I'm not. It's kind of all paying out, I guess, supposedly at this point. How I'm expecting. I want to see this kind of heavy liquidity. I'm not necessarily. It should kind of be rolling, going off or over, for example. Like it should be very hard to hit lows as it's liquidating, as it's kind of positioning in a point where you think, okay, it's going to trigger, and you're looking for that kind of washout of positioning. And at this point, like I say, I was quite happy with how we were trading. I'll speed it up just a tad so we can move on to when it actually does break. So you can see this type of liquidity and type of reloading. I was very again. Kind of, for me, that was a matter of, okay, are we going to wash down to the 43s, I believe it was, that area, 41s. And again, high volume, really nice reloading at this point. I felt was really, I mean, it's kind of churning a little bit. It's kind of going bit off. But what it is doing is very high volume. When it is going off, when it is kind of bidding off the lows, it's kind of then stacking up liquidity again. So this was really, I felt at this point, it was kind of, everything was kind of playing out. You kind of can now move your risk to the kind of the break of the initial balance. And from here, then you can kind of take it as trying to manage your risk as tightly as possible, and this should really follow through. So, for example, once we start to kind of bid back above the 64, 63s, and as you can kind of see, this whole liquidity has changed. You kind of see these offers pulled. You've got a complete difference in how we were trading a few seconds ago prior below this little bit of node of volume to how we're trading back above it. So this was kind of now your inflection point once you went on side, I felt. Above these 61s was kind of your inflection point. 61, 63s, that kind of area which you were kind of initially looking at. And now at this point it's a matter of, okay, everyone who's now sold aggressively at these lows, obviously very kind of simple principle, can potentially get squeezed out at this point. Like I said, the liquidation move, it shouldn't be giving you this much trouble. It should kind of be, flushing quite quickly. And the minute it starts to reload back above that volume, above that area, is kind of where I'm then going to be quite reluctant, a bit hesitant to kind of hold a position. So if I now move on to how we actually do trade, I believe it was at 10 o'clock I said. So if we go to around 10 o'clock, I mean, there was a few things which made the market kind of react in the way it did. With
it's too early to know whether we should cut rates or by how much in July.
So let me just fast forward. Okay, so basically we had Mnuchin speaking at this point, and there was a botched article. Or it wasn't at this point. At this point there was a botched CNBC article stating that we were 90% to a trade deal and da da da, which was incorrect. It was the other
Okay,
way.
so the
It was
dollar is
completely
one of the
misquoted.
financial variables that we track.
And as you kind of see, you had the 5 years going, 5s, 10s going quite aggressively, especially overnight session. There was a quite aggressive move. Oh, let me slow this down a little bit. So if I play this at normal speed now, your kind of zones are now back in play again. So 63, 61s. You're looking for that kind of trigger point again. So now you're getting flows through the yen, through the treasuries, and again you're looking for that kind of reloading, kind of firmness below that kind of 63 area. For me, it was 63, 61. If how long you can kind of get away, a lot of size in a very small kind of range, and kind of feed it in passively, and work an area and kind of time your size. Once the market kind of shows you, it's confirming your idea. So once you had that kind of, you can kind of see. Like I like to use the volume profiles quite a lot in managing risk on a kind of really short time frame on the ladder. So like for example, we had this kind of volume ledge at the bottom of the balance, and it all tied in with the 61, 63 area. So for me, once we kind of start again that high volume, notice how when we're upticking again, we're kind of getting, it's constantly, the reloading is always constantly there. We're always constantly seeing a kind of firm bid. So for me, it's about that interaction below this low, I suppose, really. After we, apologies. So basically, yeah, like I say, it was back below these 61s was where the kind of trigger point was, which we didn't get, and once we got back above it, it kind of stalled the idea. So again, you can kind of be quite aggressive with this trade in terms of if you're looking for initiative move here. Alright, so for now, below these 59, 60s, not initiative, you're kind of looking at this liquidation move, sorry. You're looking for this kind of reload now to step down at lower prices. So again, my risk was kind of between 60s and 61s now in the short term. Should really hold, given the kind of reloading that we saw previously. You're kind of using this kind of, trying to be very pinpoint and precise in where you're trying to manage risk in the short term, especially if you've taken a hit in the morning and you're basically trying to catch a pinch point in the market, right? So it's between that area and how long is it going to kind of thrash around before it kind of releases. And once it did release, like I was saying, you had the small counter rotation of the low. The reloading at the low was always kind of firm. Once we did kind of start to uptick into the offer, there was always liquidity stacking it on the offer. So I'll just fast forward it a little bit now, so we kind of see this move unwind. But basically, for me, the whole principle of this was there was kind of two different characteristics. Yes, you had loads of flows in the second move, but what we didn't have from the first time was the nature of how that liquidity was stacking at lower prices, especially when you're looking for a liquidation move. For example, anyone who's now trading out their positions, kind of stacking the offer, as you may kind of could imagine, trying to pay down, and this is the nature of the move, how it kind of picks up speed as it goes lower, how it's hard to get in once it's kind of broken that point. So once you've broken those 63, 61s, it was a matter of, okay, I wasn't necessarily, obviously you want to see volume and you want to see clips hitting the bid, in the matter of trying to pick a directional move, but all you wanted to see at that point was a willingness to hold the price below that area where you thought the market might kind of unwind, where it may trigger that pivot point in the market. And it's all about then at that point trying to time your size and your risk and managing your risk really tightly in that area. And like I say, this all again comes down to seeing what you wanted to see. So you wanted to see the reloading, you wanted to see high volume. It may not necessarily be the fastest paced two-way trade in that area, but what it is doing is constantly stacking the offer over and over and over again. So then you're thinking, okay, right, if we start going clipping. So for example, on this example, once we went, then I hit, I think it was 50s, 58s or 69s, 59s, 58s. At that point, then my kind of stop moved down slightly, and then because you're kind of at that point, I was trying to time a very kind of precise inflection point. And at that point, then it was a matter of then trying to trail the risk, just trail the opening P&L accordingly. And that's the thing with the beauty of this trade was it was very clear as to where I felt the market should trade to, and then it was all about managing risk between that target point, and whether it traded it out, and then how much open P&L, how much kind of risk you're comfortable with taking on it, and also just having a very clear idea as to being realistic with, okay, this is a certain amount of open P&L, or not in terms of an actual number, but for example, you need to then kind of be updating your references as you were when you were kind of executing. You're looking to say, okay, at this point now, I'm using the kind of reloading that we saw at this point, or using your footprint, using all your different kind of tools to then manage the position. But yeah, that was kind of my. This was kind of a really important bit of price action I felt early in the week, because especially it was just so distinct in nature and how different it was. And yeah, I mean, you can put it down to all sorts of things, because for example, we didn't even hear about the actual headline until long after. I mean, it was a good 15-20 minutes that this was the headline that had been released. But then we kind of had a denial of it, and the reaction wasn't the same. So even if you weren't seeing this firsthand, the news, whatever it may be, just from watching and seeing, knowing the areas you wanted to kind of be involved in and seeing the flows come in, that was, you didn't need to know what news it was. You didn't need to, you didn't need to be annoyed because it was a botched headline, or you could have been listening to Mnuchin and he didn't. And, like, we were listening to Mnuchin, and you wouldn't have even. There was no reason for you to kind of hit the market off the back of what you were saying, because it was incorrectly quoted. But that was kind of all I wanted to show you guys today. Just really quick. Just a kind of difference in how you kind of seeing the market at different times, and at what point can you kind of get, you can get really big size in these type of trades, because it's like chalk and cheese when you see the book shift, and then when you see correlated market shift as well. I mean, it gives you all the confidence, to climb into these positions with really tight risk. And that's the thing, when you know the areas you want to work and what you want to see, it's then just a matter of managing the risk really in a really tight manner to kind of start with, until you kind of get that trigger point follow through, and then managing the open P&L afterwards. So